Afternoon, good morning, and good evening, wherever you may be hearing the sound of my voice. I am Prince Roxon, and I'm here this morning, this afternoon, this evening to bring you an in depth analysis of Car Bank's financial statement. It is very important because one of the things that makes the Ghana Stock Exchange market very interesting is that it affords you the opportunity to look at a bank which is performing or a bank which is not performing. And you can get all this information through their quarterly statement. On the Ghana Stock Exchange, they are required to publish their financial statement every quarter. And this is very important because this would make you, the investor, make an informed decision whether to go ahead to put your money into that company or whether to back out. It will tell you whether the company is performing well or it's not performing well. And as an accountant and as a financial analyst, it is my duty to bring the figures down to you, explain it for you to understand, so that you can make an informed decision for yourself. So let's go into the first quarter 2026, quarter one. Cowbank have released their statement and it's very interesting. We are going to look at three things here. We are going to look at their income statement. And not only are we going to look at their income statement, we are also going to look at their financial position, which others probably calls it balance sheet. We'll also be looking at their cash flows. And these are the three things I'll be taking you through. And I'm going to explain it for your understanding. So let's get into the figures. So the question is Car Bank making money? Is the bank making money? Number two, is the bank strong? Three, is real cash coming into the company? And we will answer this shortly. Let's look at the profitability of the company as they published their statement last week. So revenues that came into the company as at first quarter 2026 was 326.7 million. I repeat it again. Revenues that came in were 326.7 million. That is the revenue that came in for the first quarter 2026. And this ranges from January to March. That gives you a quarter. Now let's do a year by year analysis. In 2025, the profit was around 35 million. 35 million was the profit for 2025. Now, when you take notice of it very well, you notice that 35 million for 2025 was profit after tax, not profit before tax. But in 2026, the profit after tax was 106.8 million. I repeat it again. Profit after tax in 2026 was 106.8 million Ghana cedis. And in 2025, profit after tax was 35.6 million. Now you notice that Car Bank had tripled their profit they made in 2025, because 2025 was 35. So if in 2026 you are making 106, you have tripled the profit you have made. And so that is how comeback did. It's so interesting. How do we able to do a comeback? A comeback of times three of what was gotten in 2025. And Car Bank must be commended for that. It is very, very, very amazing for such figures that they churn out. It is massive, and I think they must be commended for a great job. But overall, when you look at profit before tax, they had a raw profit, just revenue. Their revenue alone they generated was 326.7 million in 2026. they generated 326.7. That's revenue alone. That's revenue. In 2025, the revenue came to a standstill of 154.8 million. So we see 326.7 million in 2026 as revenue alone. And in 2025, we see a revenue of 154.8, which is commendable. And so this is a big improvement. It is they have doubled their revenues have doubled. This is for revenue. So we ask ourselves, where is the money coming from? Because we would have to interrogate where these monies are coming from. Now, it will interest you to know that where these monies are coming from, first of all, are coming from interest on loans. So Car Bank have decided to give loans out to their customers. People troop into the bank and they want loans to go and start their business, to do something, profitable. And so they come to the bank for a loan. And those loans comes with interest. Sometimes 20%, 50%, depending on, you know, the condition the bank sets. So some of this profit that was generated out of the 356.8 million, majority of them came through interest from loans, and that was 171 million. 171 million came from interest on loans, because we are interrogating if they were able to raise a revenue of 356.8, where are the monies coming from? We should be able to tell where the monies are coming from. And 171 million Ghana cedis is coming from interest from loans, and that is commendable. Number two is that some of the monies are coming from fees and charges. So the charges they charge you on the account, if you make a withdrawal, there are charges. If you go to the ATMs and you withdraw money from the ATM, there are charges. They are monthly charges, and they are charges depending on whatever services we we transact at the bank. So out of those fees and charges, the fees and charges for 2026 came up to 66. It came up to an amount of 66 million. 66 million was for fees and commission. Fees and commission. 66 million. Then we saw trading income. Trading income accrued came to a total of 89 million. 89 million. Now, when you add all these things, it gives you an amount of 356.8 million as revenue. So that is how the revenue came about. It means that the bank is earning from loans, the bank is earning from transactions, the bank is earning from investment. I repeat it again. The bank is earning from loans, the bank is earning from transactions, and the bank is earning from investment. It shows a strong business activity. Now, the total expenses came to a standstill at 165. So the expenses are, the monies the company, spent. Example, electricity. We have other costs, rent costs. All expenses that were incurred by the bank came to a total of 165 million. 165 million was for total expenses. Staff cost alone, the cost of staff came to an amount of 88 million. 88 million. This is very high, but if you are in the banking industry, you know that some of these things are high, and it is normal when it comes to the banking industry. So we see a final profit after you subtract your revenue from your expenses and from all other costs incurred, right? The total for 2026 came to 106.8 million. 106.8 million was the final profit they made. it means that it tripled. Their profit tripled because in 2025 it was 35.6 million. So if 2025 we are 35.6 and in 2026 we are having 106, it tells us that the company looks very good. Very, 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 very good. Very, very good. And this is how Car Bank looks like in 2026 first quarter. Let's look at the earnings per share. Earnings per share in 2026 was 0.1009. But in 2025, it was 0.1314. It means that 2025's earnings were better than 2026 earnings. That is one of the things you should know because the EPS, that's the earning per share, has dropped. Meaning, even though the total profit has increased, shareholders are earning less per share. Possible reasons could be one, could be, dilution of ownership. One of the possible reasons could be dilution of ownership. And I want us to look at the financial position. Let's look at the financial position. So we have tackled the profit aspect, the revenue aspect, the income statement aspect. Let's look at the financial position, which is the balance sheet. Now, we want to look at the total asset, what the banks owe. In 2026, the total asset of Car Bank was 13.4 billion. That is the total asset. When we talk about total assets, we are looking at current assets and fixed assets. So the current asset would be, cash, could be bank, right? It's money within the banks, liquidity. And when we look at the fixed asset could be furniture and fittings, motor equipment, buildings. Those are assets. Assets. So when you look at the total asset of Car Bank as at 2026, the total asset of Car Bank stood at 13.4 billion as compared to 2025. In 2025, the total asset of Car Bank was 11.8 billion, which means that Car Bank's asset has appreciated in 2026. It means that they have added more to their assets. It means they did well in 2026 as compared to 2025. There's been a jump, there's been an increase in their total assets. And so that is growth. That represents growth. If you are at one and you move to two, that is growth. You have increased. It's growth. Now we look at loans. Loans to customers. In 2026, Car Bank gave loans to customers worth 1.14 billion. They gave loans to customers worth 1.14 billion, 1.14 billion. As compared to 2026. In 2026, the loans they gave out was 2.21 billion. It means in 2026, they gave lesser loans as compared to 2025. Because in 2025, they gave 2.21 billion. And in 2026, they are giving a loan of 1.14 billion. It means there's a drop of loan in 2026. A big drop. Very, very, very big. Very gangantua. It's very big. It means that the bank is lending less in 2026. They are lending less. Or it means that the bank is seriously recovering loans, aggressively recovering loans. It could be two things. It could be either the bank is lending less or the bank is also recovering aggressively from 2.21 to 1.14. It means there's a decrease in terms of loans. And this should tell us two things, as I rightly espoused. Whether the bank is seriously recovering its loans he had given in 2025, or it's either the bank has decided to give lesser loans. Now let's look at deposits. Deposit. Customers' money. Now in 2026, the bank had a total deposit of 10.3 billion as compared to 2025, which was 9 billion. It means that customers trust the bank. Running up to the 2017-2018 banking cleanup sector, a lot of people lost confidence in the bank. People were scared to put their monies in the banks, and it was quite alarming. We knew that people were not going to trust the banks any longer by putting their monies over there because of the predicament others went through within the banking industry. We saw the collapse of Capital Bank and other banks. We saw that they had to struggle. People even had to struggle to get their money. So people lost confidence in it. But far fetched from that period to now, we have seen a gradual improvement in terms of deposit. And it is quite commendable because to look at 2025 in Car Bank, the total amount of money people deposited at the bank was 9 billion. And in 2026, we see 10 billion or 10.3 billion. It tells you and I that people are now confident enough and they trust the banks to be able to put their monies over there. And the banks must be commended for doing a great job. Car Bank must be commended for doing a good job. It means that they are doing certain things right. And that is what is putting the signal. And customers feel comfortable in putting their monies within those banks. And so we look at it as a good, initiative. It's very good and it's very positive because people trust the banks. It's a good news. We look at borrowing and we look at debt. In 2026, Car Bank had a debt of 933 million. Please take note. Car Bank had a debt of 933 million as compared to 2025. What was the figure for 2025? The debt of Car Bank was 1.8 billion, not million. 1.8 billion. But in 2026, the amount has reduced to 933 million. It means that the bank is really recovering. They are really reducing their debt, which is a good initiative. It's a good move. For me as an investor, when I see this, it is a good news for me because the monies that were supposed to be recovered in the past, which became a challenge, a debt of 1.8 billion has now been reduced to 933 million, not billion. From a billion to a million. It means that the bank is doing well, which tells me that the debt has reduced by half. The debt has reduced by half. Shareholder equity, which is your real value. Shareholders' equity in 2026 was 1.69 billion as compared to 2025, which was 308 billion. 308 billion, which is a very big improvement from 308 in 2025 to 1.69 billion, which is shareholders' equity, which is your real value. You see, but the big warning here, in as much as I've painted a glorious, statement of Car Bank, this is the big warning. The big warning is that they add, return earnings was negative. That is the but. Return earnings was negative. Negative was the return earnings. In 2026, we see negative 733 million. That was the return earnings. Negative 733 million was the negative returns of that. That is the but. And so this means that past accumulated loans still exist. Although the bank is taking serious steps in recovering it, but the earnings are negative. The earnings are negative. That is the but you must look here. I printed a glorious statement to you, but there's a but here. So you must take note of that. Our last one I want to talk about is the cash flow. The cash flow has increased significantly. From 2025, Car Bank had a negative cash flow of 351 million, negative 351 million, which was nothing to write home about within their cash flow operations. But in 2026, we see 1.4 billion, positive 1.4 billion as cash flows. It tells you that a lot of money are coming in, which means that the bank is now generating real cash. The bank is now generating real cash. The bank is now generating real cash, not just people, real cash. This is what the bank is doing. And the bank must be commended from negative 351 million to 1.4 billion. Ghana cedis in 2026. And Cowbank have really put, a great comeback. This is a great comeback. And so you look at that and you ask yourself, what should you do? The risk indicators here are the non-performing loans, the bad loans. 2026, bad loans, non-performing ones. I came to 2026, 15.1% as compared to 2025, which was 45.5%. It means there has been, an improvement. Let's really commend Cowbank from 45.5% in 2025 to 15.1%. It's still high. It's still high. Although, they are they have made a great jump, we still want them to come down to 3. So 3. At least they must reduce the 15% in their next quarter. Let's see how they do that. So these are some of the risks. Although the 15% is high, but it is better than 2025, which was 45.5% for that. And they must be commended for that. Because 15% is still higher. Ideally, it should be somewhere within 10% and lower. That is within the capital adequacy ratio. So we look at the capital adequacy ratio, 17.2% for the capital adequacy ratio, which is very good, above the regulatory, minimum, which is very, very, very good. And we see the liquidity ratio. In 2026, the liquidity ratio was 90.7% of that. Very, very strong. Banks can meet their withdrawal. It means they can meet their withdrawals. They can meet it. So, in simple summary, we see positivism here. We see positive here. We see profit has increased significantly. We see that revenue has doubled. We see that the cash flow is strong. We see that debt has reduced. We see that deposit has increased. We see that risk bad loans has improved. We see that capital strength is solid. Solid. But the negatives here is that the earnings is failing. Shareholders' values concerns. We see that the loan dropped sharply. Growth concerns. We see bad loans still negative, which is higher. 15% is still higher. Although it has been reduced from 45.5 to 15, it's still higher. At least it must come to 10. And my wish is that it even comes to 3, one of these days. Bad loans still relatively high. And, so this is my view. Recovery, it's gradual. It's doing very well and must be commended, but not fully stable yet. Cowbank is not fully stable yet. So this is my advice. When it comes to you purchasing the stock, you buy Cowbank gradually. Buy it gradually. Buy it with a strategy. It's a good bank, but buy it with a strategy. So for those of you who want to take advantage, the price have dropped. Take advantage of it and patronize it, but you must buy with caution. You must buy it gradually. You must buy it with caution. With all the analysis I've given you, kindly make a decision. And it's going to help yourself. I have done the analysis. I can't say buy it or don't buy it. I've given you the good and the bad. And I've come to, an informed decision that you can buy the stock gradually, but it depends on you. How much you want to buy is incumbent onto you. So Cowbank is a strong mark. They are doing well. Their comeback is massive and they must be commended. Management of Cowbank must be commended for a great job done. And we want to see, a positive one again in the second quarter. So our fingers are crossed. This is Cowbank's analysis. I am your brother, Prince Roxon, your financial analyst. I'll be bringing you more on other financial institutions, other companies listed on the stock exchange, and I will be analyzing their financial statement, which has been published for the first quarter 2026. Bye-bye. Stay safe.